Welcome to the Scalable Real Estate Investing Podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Clement. Hi everyone, Mason Clement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? That basically you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. Hi, Scalable investors. Thanks for tuning in to another episode of Scalable Real Estate Investing. I'm your host, Mason Clement, and today we have with us Billy Keels. And just starting out, it's a Friday, so have to pause sometimes to collect my thoughts. But so Billy is founder of First Generation Capital Partners, a real estate investment firm that works with highly paid professionals to attain financial independence by passively investing in really smart, cash flow and tax efficient vehicles, and is also host of the Going Long podcast. So really excited to have him on the show. I think he's going to add a lot of value here. So let's just jump into things. Billy, how you doing? What's going on?
Mason, man, I'm doing well. As you say, yeah, it's a Friday afternoon for me here, but I'm enjoying it. I appreciate the conversations that we've had so far, and I'm just looking forward to another educational, fun conversation. And the goal is at least everyone who's listening will be able to derive some value from our conversation. So looking forward to it.
All right, perfect. So yeah, just jumping into things in case our listeners are not familiar with your background. Why don't we just get into that? Like what got you to where you are now, what got you into real estate and brought you to today?
Yeah, sure, Mason. Would you mind me asking just one quick favor of your audience? Just really
Go
quickly.
ahead. Yeah.
So as a fellow podcaster, because I've been doing this for a while now, one of the things I know that it takes a lot of determination and a lot of grit to be here, and also a lot of focus from you and your team. And so if you're listening and you've been listening and you have not had a chance to take just a couple of seconds to leave Mason an honest written review and rating, that would be very, very helpful, because what that does is it allows him to also attract other guests that are going to help you get exactly what it is you need. So if you haven't done that, just take a couple seconds, and I know it goes a long way. So with that as a background, just really quickly, Mason, as somebody who is originally from the Midwest of the U.S., I was originally from Columbus, Ohio. By the time I was 12, we'd lived in 3 different states. I was also, or am, the product of parents who are very blue collar. I watched them really work hard. Like, that was work ethic. It was one of the things that I really learned from my parents. I also recognized that they had a lot of challenges as it related to finances. And so I watched them struggle a lot when I was younger, sometimes to the point where they had to decide like which bills they were going to pay at the end of the month. And sometimes that can be pretty stressful, right? And seeing that as a young kid. But one of the things that my parents, they always gave us, me and my brother and sister, lots and lots of love. And as we moved through different states, we have a really strong family unit. And I watched them work hard. And so I took that away to the classroom. I was one of those people, or one of those students, who worked really, really hard, studied a lot, and got really good grades. And so being someone who gets really good grades, I studied hard, got good grades. And so I got used to that, where you studied hard and you got the reward. Well, and I did that through college. I had 2 degrees. I ended up going to Miami University, which is in the southwest of Ohio. 2 degrees there. I thought that I was going to continue to get through that cycle where I had my sights set on my dream job. My dream job didn't quite work out. I got rejected not once, but twice from my dream job. But through that rejection, it actually opened up a world for me that I never, ever, ever anticipated. I mean, just to give you an idea, Mason, like being from Columbus, Ohio, I never even thought I was going to get to California. Like I thought that was super, super far away. And so what happened to me after being rejected twice by my dream job, I ended up working for a company that allowed me the opportunity to work and travel throughout some 58 countries. And so by the time I was 26, I'd worked and traveled throughout 58 countries, kept working in the multinational. I moved after that. I didn't want to do a normal 9 to 5. I ended up moving, getting accepted to a university in Paris where I wanted to do a 1-year sabbatical. And this was in September of 2001, Mason. And so in September 2001, I thought I was going to move to France. I was going to learn more about French language and culture. I was going to learn about wine, and I also wanted to learn more about salsa dancing. Don't ask me why I picked those 3 things, but those are the 3 things that I picked. But what I can tell you from that is after that 1 year, I ended up going back to work in the multinational. So I left the hospitality industry that I was in, and I started working in the IT space. I moved from Paris down to a town called Montpellier in the south of France, and I stayed in in hardware for quite a while. I also then have moved into the software space up until recently, where I've finished after 26 years. But the key here, and this is one of the things that you mentioned before, is kind of where are you, right? After that 1-year sabbatical, I really enjoyed it so much. I left Paris, I went to Montpellier, as I mentioned to you before, but I also had a chance to live in Italy. And from there, I went to start up a sales team. And I left Italy to go back to France, where I was still working in the sales team. And then eventually I moved from the hardware space into the software space. And I moved to Barcelona, Spain, because I met this really cool, wonderful woman from Barcelona. And I have been living in Barcelona, Spain since July of 2005. And one of the things I always tell people is, especially when you want to do like a 1-year sabbatical, because I know that can be all the rage. When you do a 1-year sabbatical, you just have to be very careful, because that 1-year sabbatical can end up being living in 3 different countries, learning 4 additional languages, getting married, and having 2 children, because that's kind of what's happened to me after my 1-year sabbatical. But that's a bit about me. And also, I'm sure we'll get into where real estate falls into this whole picture. But yeah, I think that's pretty much it. And I think I'd already mentioned after 26 years, it was time for me to leave the corporate life, and officially retired from corporate life, and now focusing on other ventures like First Generation Capital Partners that you mentioned before.
Okay, great. Yeah, it's a really interesting story, and I'm definitely interested in unpacking a little bit more the international aspect of things. For anyone who doesn't know, listening, I actually was in China full time for 2 years, and it wasn't really a sabbatical. I was like determined to live there the rest of my life, and started a product development company. And then actually we decided we should go back to the West, me and my business partner, and I went back to New York to sell these products to local retailers. It was like Bluetooth speakers and headphones and stuff. And we really assembled this catalog of products developed by factories, and kind of a branding strategy. Anyway, ended up going back into corporate America, but it was an outstanding experience. Although I felt like I probably made it a little more difficult than it had to be, because I was living at certain times in very industrial areas that was closer to factories, and it sometimes get depressing. And I think living in Europe, where it's a little closer to home, just in terms of culture and everything, is just probably a lot easier. I know when I get homesick, like at first I lived in Hangzhou, which is 1 hour west of Shanghai. And when I get homesick, I go to Shanghai because it's just so metropolitan and easier to live. That's why most Americans are living like in Beijing or Shanghai, but mostly Shanghai. Anyway.
Yeah, I find it really, really interesting, Mason, because I'm just imagining you in that experience of 2 years, because I can only imagine what that has helped you to bring to life and experience and exposure and perspective, because it's something that so few people do, right? And just having had that experience, it gives you something so unique and so, it's just a very unique perspective that you're going to now bring. And I'm sure you bring it to so many different conversations, interactions, everything that you have, because man, you had that experience. That's really, really awesome, man. I know we're not here to talk about that, but I'd love to hear more about that. That sounds awesome.
Thanks. Yeah. I got lots of stories that we could unpack there, but it's not a international travel podcast, so we'll stay on track.
Okay. All right. Let's get back to the stuff.
but I was curious. So being in Spain, I believe most of your real estate investments are based in the U.S. Is that right?
100% of them.
Okay. So
100%. Yeah.
how do you do that? Like managing your business being, I mean, I know there's some overlap there in time zones or whatever, but can you go into that a little bit more about how you do that?
Yeah, sure. So, and one of the things that's really interesting because in the beginning, I did maybe just to add a little context, right? I did not initially have enough education nor network to help me realize that, I read Rich Dad Poor Dad and I picked it up and then I put it down and I picked it up again like 3 years later. I actually read it end to end and I devoured all the Rich Dad books. And then I started watching videos and listening to podcasts and all that other kind of stuff. And so, but what I did not have at the time was enough education nor network to realize that by living in Barcelona, I wanted to apply all that knowledge to where I lived. And so, not recognizing that I was living in an appreciation based location, not one that was focused on cash flow, which is what I wanted, I got really frustrated because all the books kept telling me, oh, do this, get your net operating income. And then after you take out the mortgage, and you should be left with $200-300 a month per door. And when I was here, it kept coming out negative 50 euros, negative 75 euros, negative 200 euros. And I was like, I don't understand this. And so ended up some really good friends were like, hey, listen, you're an American citizen. Why don't you buy back in the United States? And I thought, are you serious? Like, why would I buy in the United States if I live in Barcelona? Because there's like the entire Atlantic Ocean between where we live. That doesn't make any sense. But then after going through and finding and increasing my education, starting to build a network of people, I realized that I needed to purchase back in the United States. And I didn't really have a lot of criteria. I knew that I had money in the bank. And I knew that I didn't want to rely on the stock market anymore, because in 2000, the dot-com bubble happened. I lost some money in the value of my portfolio. In 2008, the exact same thing happened with the great financial crisis. And when that happened, I thought a lot about what my parents told me, which was, hey, listen, Billy, if this happens once, shame on you. If it happens twice, if it happens once, shame on them. If it happens twice, shame on you. And so that's when I started looking into real estate and I started going down that track. Well, one of the things that I realized is really quickly is that geographically I was in a different location. And because I didn't have the education nor the network, I made a lot of mistakes, Mason. I made a lot of mistakes. Like, it was okay because I bought the property, but then very quickly I started realizing, well, I live in Barcelona and I don't have a property management company because I was thinking I want the property. I wanted to start having more control over the financial aspects of my life, but I kind of forgot that this was actually a business. And so as I was making mistakes, realizing that we needed to get a 24-hour, 7 days a week answering service, eventually you got a handyman, and you do this over an iterative process, you then decide, hey, listen, I need to make sure that I have a property management company because they are going to provide the service that I need. But I was building the team after the fact, which is not a good thing. And then I started realizing I didn't really know much about the location that I was living in either, because I only picked the location because I wanted to make sure that I had a family member that could get there in like an hour and 15 minutes. And that's how I picked the location that I purchased the property in. No much more sophistication than that, not more studying into anything else. But the thing that I knew is that I wanted to get cash flow. So to answer your question, like, how did that happen? Well, it happened just because I took action, because I didn't overthink things, but I did things in a way that I now teach and talk to people to do the exact opposite way. And what do I mean by that? First and foremost, you need to have a very clear reason as to why you want to be investing. Like, what's the benefit you're looking for and why do you want that benefit? Once you're clear on that, then you should go to the location that gives you the highest probability of being able to get that benefit, i.e., if you're looking for cash flow, you're clear on why you want it, because you want to be able to travel around the world with your family once a year, or because you want to be able to retire in your 30s or in your 40s. Well, okay, great. But then go to the location that's going to give you the highest probability of getting that. And then once you're in the location, then you build the team. This is the really key part that I got wrong because I didn't build the team in advance. Afterwards, make sure you have your brokers, and whether they are real estate brokers, land brokers, who are insurance brokers, making sure that you have your legal team, making sure that you have the right team of people that are going to ultimately serve your client, and your client is your tenant or your resident, however you want to call that. But once you have the team in place, then you can get the specific opportunity that you're looking at buying. And so now that's what I teach other people is, be clear on personally what it is that you want, go to the location, build the team, and then purchase the opportunity, because that's the opposite of what I did when I got it completely wrong. So hopefully that helps a little bit to understand literally how I got started from Barcelona to invest back in the United States. Definitely did it wrong, and now I've figured out a way to be able to do that. Happy to go into more detail on any of that stuff if you want.
Okay. But say like someone goes to your website and they want to see if they qualify as being an investor with your company, and they schedule a call. So I guess you're just scheduling calls when y'all schedules overlap. It doesn't really matter if that you're across the ocean.
Correct. Yeah. So this is one of the
Okay.
beauties about technology, Mason, right? Because, and I don't know, when were you living in China?
2013 to 2015.
Okay, so this is right around the same time, right? And so this is really interesting because a lot of people think, hey, everybody's using Zoom and all that stuff, and they think it happened just with the pandemic. I'm like, well, no, I've been using Zoom since like 2012 or 2013, something right around that same time. And the thing that happens is when you recognize that we are so fortunate to live in the moment in time that we're living in, we can leverage technology, or when you leverage technology properly, it really doesn't matter where in the world you're living. As long as you have the right processes in place and the right team members in place, you can do pretty much anything at any time. I mean, just think about it today. We're on a Friday and it's late in the afternoon for me and it's in the morning for you, but we're still able to communicate with one another, share ideas. And it's the same thing when we're talking to clients. Because I don't want to put any geographic location restriction on anybody. We may have investors that they reside in the United States, but maybe they travel 200 days a year and they like to be outside of the US and they're in Thailand or they're in Buenos Aires, Argentina or something like that. So I think it's a wonderful opportunity nowadays because of technology, being able to use technology and leverage it so you can be wherever you want to be. And as long as the time zones work out, then they work out. And usually if they don't, and it happens every once in a while, Mason, then we have to go to some type of a manual process if it makes sense for the two of us to find time in the calendar. So, but we do try to leverage technology as much as possible to be able to have these interactions.
Okay, cool. Yeah, otherwise it's like in 3 months, meet me in Istanbul at the coffee shop at the corner.
Yeah, something like that.
There will be a man there with a briefcase and,
In a
and an
black hat.
umbrella. Yes. All right. Cool. Actually, my uncle's a chef, and he told me the best food in the world is in Istanbul. And he told me he had made this appointment with this friend of his, and they were going to meet. So romantic. They're going to meet in 6 months or 6 years. I forget what it was in Istanbul at a coffee shop. Or I don't know, and explore the taste of Istanbul.
Well,
But
it's a fantastic city, by the way. It is.
okay, I haven't been over there. I've been to a lot of other places in Europe, and haven't been to the African continent, by the
Okay.
way. So
Yeah, been there, been there.
Morocco, me.
Go
Oh,
ahead.
sorry. Me and my wife want to go to Morocco just as a starting point, or
Mm.
South Africa seems really interesting, but all sorts of great places, I'm sure.
Yes. Well, we can talk about all that stuff later on. I think this is going to become a travel show.
Yeah, I mean, I love it. I just really resonate with what you just said. I mean, like no one should be restricted, especially in today's world, by boundaries. And I
Mm.
feel like I've talked a lot with my wife about it. Like we want to have a home base somewhere, but why be restricted, especially if your income can allow it to
Yep.
just get up and go and travel anywhere.
Yep.
Unless, of
That's it.
course, like you have a little one and they need to go to school. But even then, you could homeschool, I guess, in theory.
Yeah, I mean, there's a lot of people that do that. You can either homeschool or maybe you have a specific type of education that you want your child to receive, and if you're in or near a place that provides that type of education, maybe it's a language specific type of education. You can live anywhere. Maybe you decide you and your wife, you want to live in city X for a year, and then you kind of use that as home base and you travel around the region. And then the next year you keep your child in that same type of environment from a schooling perspective if you don't want to do homeschooling, but you're traveling around the globe. I mean, think about the British schools or the American schools or the French schools and all this kind of stuff. And you can keep this the consistent curriculum and live in different parts of the world. I think
Huh.
it's awesome.
Yeah, definitely have to consider that. Down to business, because I know you have a hard stop in about 20 minutes or so. I was just curious, like, what kind of investments are you doing right now? Like, what's your mix between multifamily or other types? What's typically the properties you're investing your clients into?
Yeah. So one of the things that, and this is just through evolution, right? Because there's one thing that is, what is it that I have been doing personally, and then is where's our company focus today? And from an investment perspective, the experience that I have as an investor, and keep in mind, I was a very high paid professional in the enterprise software space. And so it was also very demanding. And being in sales and sales leadership, like one of the things that was not really well received was the fact that you kind of have a side hustle. And I had a side hustle for almost a decade, Mason, like almost a decade. And so during that time when I was this, you have this experience when you're a high paid professional, you're in a high demanding role. I was in the top talent program. I was, going to Hawaii every other year for being a top achiever. And a lot of those things allowed me to take what I was doing with my active income and be able to invest in things that generated passive income, things like rental real estate. And so I started, and I know we started talking about this earlier, I started purchasing small multifamily apartment or small multifamily buildings while I was working my day job with this 6-hour time difference and working early in the morning, transitioning into my really high paid, high demanding job. And then late in the evening, I would go back to working on building my business, the investment portfolio and things like that. After I had these smaller multifamilies, I was very fortunate because they were generating lots of positive income. But what I didn't have in place at the time were systems. I didn't understand what was happening. I was having this early success, so I stopped doing that. I actually invested in a mentor, and that mentor helped me to put processes in place, start understanding that you don't just buy a property because your family lives there. Like that's not a very good criteria, especially when you're investing your money or other people's money. And so I got process. I started understanding how things work. And then I ended up purchasing, because I followed a very specific process, a mobile home park that was in the Charlotte MSA. And so then I was actively investing, actively managing these properties from Barcelona, Spain. And then I realized that I was something, or it came to my attention a couple of years later, that I had a qualification known as an accredited investor. I had no idea what that was. I didn't know, because I don't come from money. I had no clue that I was part of this special club. But what that did is it provided me an opportunity to then invest my capital, my money, with other people. And the other people were doing all of the work. Like they were doing the work, and I was receiving not the same benefit that I was receiving when I was actively managing, but there was a benefit that I was receiving. And I thought, wow, this is much better than the stock market. It's much more predictable. I can speak to people. I get to know their first name. I get to know their last name. And so I started then moving into the world of passively investing, which meant that I went out, I met the people who were bringing people together. A lot of times they talk about the sponsors or the syndicators. I got a chance to meet them, understand the projects, and then I just started placing capital with people because it made the most sense. Because I was actively managing, I began to passively invest. And like I said, small multifamily, I have a mobile home park. I then started investing in development projects in hotels, like Hilton branded, Marriott branded hotels, more for the business traveler. Also in larger multifamily projects, 200 plus doors. And then at the same time, I was having this, this very specific problem that I was investing in real estate. And one of the things that I kept hearing is that real estate was going to help to bring my taxes down. Like, invest in real estate, it'll bring your taxes down. It's really tax efficient and all that kind of stuff. And so after like 5 or 6 years, I started realizing that there was this line on my tax returns that was passive losses. And it was literally like in the hundreds of thousands of dollars. And I was like, well, what is this? I don't understand that. And what really juxtaposed it was the fact that I kept paying 40+% in tax. And I thought, well, hang on a second. I thought real estate was supposed to drive my taxes down, and it wasn't doing that. And so then I started looking for a way to figure out, okay, how do I use these passive losses? I then invested money with my and I invested to sit down with my CPA so that he could explain the difference between passive income and ordinary income and all these different types of things like gains and types of gains. And I really had, because I didn't have it clear in my mind. But once I understood those different kind of concepts, I realized that if there was a way that I could create consistent returns and at the same time not have to pay such high income tax, then I would be able to really combine all these different vehicles together. And so lastly, and the thing that I've been focusing on lately is also investing in the energy sector, specifically in an area which is much cleaner in terms of carbon and carbon absorption. And those are the different vehicles that I personally have been involved in and have invested in as an investor. All of the hard assets, I do have a very small number of, well, I have a smaller portfolio in terms of companies in the paper asset space, but these are legacy that I've had for a while, and because they're doing so well in these really well-known companies, I just kind of keep them there. But I definitely don't put more in focus on the paper assets. I really focus on those hard assets that generate real cash in your bank account and also have tax efficiencies, whether those are tax efficiencies around your ordinary income or your passive income. So hopefully that answers your question.
Yeah. Well, just like in a few sentences, are you actively sourcing stuff now, or are you more raising capital for other sponsors' deals? I mean, both are obviously fine. I'm just curious what your strategy is and how it runs now.
So today I have my own syndication company, if you will. So I bring people together for syndications that are my responsibility and my own exclusive responsibility. And right now we're focusing on the energy sector specifically. And the primary reason for that, Mason, is because when I was a high paid professional, I was in a place where I was a very busy professional. My wife is also not a U.S. citizen. She's a busy professional. And I started realizing that if I could help to like I said, create those consistent returns and pay less taxes, then it was a way for me to accelerate the way that I was investing in other vehicles. So today, I've just extended what I used to invest in to solve my own problem up front. And now I'm specifically having my company, First Generation Capital Partners, as you talked about before, help other accredited investors be able to solve that same challenge that they have, which is creating consistent returns and also being able to pay less in income tax. So hopefully that answers the question as well.
Okay. So, yeah, I definitely want to get into this. I think it's really interesting because energy. So, like, the difference is if I am a W-2 employee and have that W-2 income considered the active income, I cannot use the depreciation from a multifamily property that I've passively invested in to offset that W-2 income. But I can offset the W-2 income if I'm using that passive investment in an energy asset. Is that correct?
So I guess the first thing I would say is in for both the two of us, or at least for myself. So I am definitely not a tax advisor. I am not pretending to be a tax advisor. And so I'm not giving anybody any advice, and I don't think you're giving anybody any advice either. So what we're talking about are just principles and things that, I've seen work with other people, but in no way, shape, or form am I giving anybody any type of advice. So from the things that I have seen, Mason, it typically is if you are investing in some type of stream of passive income, and passive income is really an IRS definition. It does not mean you're not working for the money. It means the IRS considers it to be passive income, and it's whether it's rental properties or things like royalties, and it has a very specific type of tax brackets that go along with them as well. But typically, unless you meet a very specific IRS designation, if you are generating income that is passive, that passive income can only be offset, as I've understood it, by passive losses. And that's one kind of bucket. And then if you are generating income that is ordinary income, that's in a different bucket. And unless you have a very specific designation, you can't mix those two buckets. And the reason I share that is because that's also one of the things that I learned, because I didn't understand that early on. And it was after a number of years that I started seeing these things called passive losses on my income tax returns, and I couldn't access them. I wouldn't have been able to access them until I sold the property, or until the syndication that I was a part of actually sold the property. At that point, I could then recuperate or use the passive losses that had been building up.
Yeah. Okay. That makes sense. So, how does it work though? If I was to invest in one of the energy offerings that you have from a tax perspective, obviously everyone's got their own thing. They should consult with their own CPA.
Yeah.
But if I was still working the day job, which I'm not at this point, but I'm just curious how it would work.
Yeah. So, and this is, you said something that's really, really important. So once again, talking about this as principles, and everybody's tax situation is very different, not giving anybody any tax advice, but, take these concepts and talk to them about with your tax professional. So the way that we have done this. So first and foremost, this is the type of investment it's an exclusive investment for someone who is an accredited investor. So, and I don't know if you've talked about accredited investors or not, Mason, but maybe I'll just help people kind of level set from the beginning. So you qualify as an accredited investor if you are someone who, for the previous 2 years, has earned $200,000 of income, and you're reasonably expected to earn $200,000 in income this year. Or if you're filing jointly as a couple, the previous 2 years you've had $300,000 of combined income, and this year you are reasonably expected to also earn $300,000. That's the first criteria to be able to become or designated an accredited investor based on income. There is also another way that you could, if you're not qualified by income, you can qualify based on your net worth, not including the value of your primary residence. If you have $1 million of net worth, not including your primary residence, then that would also qualify you individually or jointly as an accredited investor. And then there is a third way, and I think it's taking a test. There's like a Series 7, Series 65, Series 82. If you are able to qualify for any of those three, then that would make you an accredited investor and would allow you to qualify to look at or to find out more about this specific opportunity. So hopefully, did I clarify that just on terms of what accredited investors are?
Oh yeah, that makes sense. I mean,
Okay.
so if it's like a 506c offering, you must be accredited, and you have to provide proof that you are, like by providing a tax return or a letter from CPA or something, right?
Yeah, that's
Otherwise,
it.
it must be a 506b, which has a maximum of 35 sophisticated investors who don't meet that definition.
That's
And
correct.
you also have a pre-existing relationship and all that. It's a whole rabbit hole there.
Yeah, exactly.
That
So,
makes
and then
sense.
that's exactly it. So, and then coming back to your question, so this specific opportunity we're talking about has to do with the energy sector. This is for accredited investors only. So it is an exclusive type of investment. And so what this helps to solve, Mason, is what I'd mentioned to you before, because to your point, when you're investing in passive income investments, meaning i.e. real estate, maybe you're investing with other people through a syndication, and that is i.e. passive income. Once again, check this with your tax professional. In most of that income that comes in, it's extremely tax efficient. Like, it's extremely tax efficient. And a lot of the losses that are generated, from my understanding, those losses are also passive losses. So if you are someone who is an accredited investor, you are a high income earner, let's say you work maybe for one of the big four, or you worked in the enterprise software space like I used to do, and you are a very busy professional, your spouse is the same thing, and you dedicate your time and your energy to your profession, then that investment in the real estate typically is not going to allow you to reduce your income tax, because those are two different types of taxes. One is different types of income. One is passive income, the other is ordinary income. And so the fact that they cannot mix with one another would negate, to your point, the probability of being able to use those losses against your active income. There are some very specific circumstances and very specific IRS designations that if you have them, then that would allow you to mix and mingle the different types of income, whether it is ordinary income or passive income, but that happens in a very specific type of designation.
Okay, but with these energy assets, are they able to kind of shield some of that income and offset it?
Yeah. So coming back to the energy. So this is specifically around an absorption machine for CO2, and with this type of investment, the accredited investor is able to invest in this type of investment. What it does is two things. As you're evaluating any type of investment, is looking at the return, right? Look at the return and the risk adjusted return, how well you understand it, how well you understand the team, and being able to generate returns, consistent returns in the future, as well as being able to have the losses, any of the losses that are taking place, being able to take those against your ordinary income or your W-2 income, for lack of a better term. So yes, you can accomplish both of those things with the type of investment that I'm talking about. So there is a direct impact on the consistent future returns, as well as upfront having the tax deduction against your ordinary or W-2 income.
Okay, great. Yeah, that's really interesting. I know there's another So they call it a loophole out there right now with like short-term rentals, where if you own a property and it's strictly like an Airbnb type of property, then you can also use that to offset your ordinary income. So
Yeah,
interesting stuff.
so it's really it's interesting. So because a lot of times, and this is also the way that I grew up, is just kind of like, hey, listen, why, how is this, or if, I don't know if it's the loophole or what you want to call it, but it is really understanding the tax code, right? And so no one gets anything for free. And so when you are able to take certain types of risks, because every type of investment is a risk, even having a job is a risk. I mean, Mason, you and I both know that, right? Because one day your number could be called, or they could have a reorganization. And guess what? You thought you had this great cushy job, and the next day you really don't. But when you have a team that understands the tax code and can help you navigate the tax code and use the tax code to your advantage, because you are willing to take the risk as an investor, the calculated risk, right? Because like I said, there's risk with everything, but you're taking that risk, you're understanding the team, you're understanding the investment opportunity, and you're doing something that the government has asked you to do. And in return for what they've asked you to do, you're provided with different types of incentives and different types of credits, if you will, if you're willing to take the calculated risk to invest in that specific opportunity. And it's no different. I don't know. I'm not really familiar with the short-term rental thing, but I'm sure it's very similar. There must be a shortage of people doing short-term rentals, so the government doesn't want to be involved in that type of a project. This is my assumption, of course. And so in order to provide that type of a service, maybe it's what spurs on generating more demand to people to get into that space.
Yeah. I'm not sure why either why it exists, but it's great for now, as long as
Yeah.
it lasts. Okay. Well, if people want to learn more about the investment opportunities and see if they qualify to work with you, how could they do that?
Yeah, Mason, I appreciate the opportunity to talk about that. But yeah, so especially if you're that high income earner, you're an accredited investor. And as Mason said, you want to find out more about what we're doing. We've come up with a nice guide for you to get more information. You can go to firstgencp.com/pay less tax. Once again, that's firstgencp.com/pay-less-tax. And that way you'll get the guide. You can find out more about us. You can, while you're there, you can go to the firstgencp.com website as well, learn a little bit more about how we're serving accredited investors today. One of the other things I would also say is, if you are someone who is interested in learning more, I mean, we're talking about this traveling around the world and long distance investing, you can feel free to definitely stop by and check us out at the Going Long podcast with Billy Keels. And then lastly, if someone wants to get in touch and know more about who I am, I think I'm the only Billy Keels in Barcelona, Spain, and you can find me on LinkedIn that way. I know, Mason, that's how we connected, and so feel free to reach out. And I think I'm the only Billy Keels in Barcelona. So with that, Mason, I really appreciate the opportunity to come in today and to share a bit more about my story, and also how we're helping other accredited investors.
Sure. Yeah, I think this was definitely interesting. Thanks a lot for coming on the show. Really appreciate it. All right, that's another episode of Scalable Real Estate Investing. Thank you for tuning in. Please be sure to leave a review and subscribe on whatever channel you're using to listen or watch these episodes. And also be sure to go to scalablerealestateinvesting.com, scroll to the bottom, and fill out the form to sign up for our email. And you could also reach me directly at mason@scalablerealestateinvesting.com. That's MASON at scalablerealestateinvesting.com. If you'd like to get in touch with me to either partner on deals or even be considered to do your own episode on this podcast. Thanks again, and have a great day.